Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 13th of August 2022. We're publishing our gold and silver weekly update for the week ending the 12th of August. We've seen gold and silver prices rise, the dollar fall, and equity markets and cryptos rise too. What's been happening and what do we expect to happen? Well, let's take a look. Now, gold rose $26 last week, rising from 1776 to 1802, having hit a high of 1808 and a low of 1771, a rise of 1.5%, and this follows the previous week's rise of 0.6%. In sterling terms, gold finished the week at £1,485, up £14, and in euros it closed at €1,757, and that's up 12 euros. Silver rose 92 cents, and this follows a previous week's fall of 48 cents. It rose from 1991 to 2083, having hit a high of $20.85 and a low of $19.81, a rise of 4.6% and making up some ground from the previous week. In sterling terms, silver closed at £17.17, that's up 68 pence, and in euros it closed at 20.33 euros, that's up 0.76 or 3/4 of a euro. The gold to silver ratio fell from 89.2 to 1 to 86.5 to 1. Now, looking at the prediction we made last week, we said, quote, we expect to see gold trade between 1725 and 1825. With 1675 and 1850 as outliers, and we forecast silver will trade between $20 and $22, with 1920 to 2250 as outliers. And both these precious metals traded within our normal trading forecast. Gold traded within a band of just $37, that's the difference between its high and low, with a range of only $41 the week before, so it's been quite range bound, though in positive territory. Silver traded within a band of $1.04, which tends to be close to the average, compared with 96 cents, which was low the week before. Now we shall look further into gold and silver once we've looked at the other financials. Bitcoin has risen $486 this past week and currently stands at $24,696. Equities were higher this week. The Dow Jones closed on Friday at 33,761. That's up 424 points on the day and up 958 points on the week. The S&P 500 closed at 4,280, up 72 points on the day and up 135 points on the week. And the Nasdaq Composite closed at 13,047, up 267 points on the day and up 390 points on the week. This has surprised some analysts in as much that we've had 2 quarters of negative GDP growth, thereby technically pushing the US into a recession, and yet we're seeing equity markets rise. Brent crude closed at $98.15, that's up $3.23, and WTI crude closed at $92.09, and that's up $3.08 on the week. The dollar index stands at 105.63, that's down 0.99 or virtually 1 point on the week. And we're forecasting really that we're going to see this dollar index move quite regularly between this sort of 105 and 106.5 sort of figure for a little while yet. Let's now take a look at the financial data that occurred or was announced this past week and what we are to expect this coming week. Okay, taking a brief look at last week's economic data announced by the United States, we can see on Monday we had the New York Fed 3-year inflation expectations, the 3 years to July, coming in at 3.2%, which is marginally down on the 3.6 previously. Small business index was marginally up at 89.9. Productivity was down, but not as down as forecast, for the second quarter at minus 4.6, and unit labour costs were higher than expectations for quarter 2, but lower than the previous quarter. Now, the important data was the consumer price index, which actually was unchanged, which was quite heartening for the economy, arguably, in that expectations of 0.2% increase were expected for July. And core CPI was slightly lower than expectations, coming in at 0.3%, positive, however, still a rise, but 0.2% lower than expectations. So this gave us a year-over-year CPI figure of 8.5% compared with 9.1%, and a core CPI figure of 5.9%, equivalent to what it was previously. So this is suggesting, the jury is still out, but it's suggesting that inflation may not be curbed, but may actually, its rate of growth may have at least subsided. We shall see in next month's figures, which are the ones we're going to pay particular attention to, because of course they will come out just prior to the Fed making its interest rate decision, and that will be towards the latter end of September. On Thursday, jobless claims 262,000. That's down 2,000, which is good news. However, the continuing jobless claims were up slightly at 1.43 million. Producer price index was down, again suggesting perhaps inflation to a degree has subsided, and that was down 0.5% against expectations of a rise of 0.2%. As I've said, next month's figures will be the ones of particular note. Import price index down 1.4%, and the UMich Consumer Sentiment Index, preliminary, was 55.1 compared with expectations of 52.5. Interesting. Now, this coming week, we have the Empire State Manufacturing Index for August and the NAHB Home Builders Index, both for August. On Tuesday, building permits, housing starts, industrial production figures and capacity utilization rate. Perhaps, not necessarily the more important, but certainly the most observable figures will be the retail sales figures announced on Wednesday, August the 17th for July. And these will include and exclude motor vehicles. We also have the minutes from the FOMC meeting, and some analysts will pay that some attention to give us a guide as to what the next meeting is likely to predict. Our view is it's not going to be too much of a guide for the simple reason that 2 months will have passed and a lot of economic data will have passed under the bridge by then. Thursday, jobless claims, as always. We have the Philadelphia Manufacturing Index, and we have leading economic indicators for July. And really on Friday we just have an advance report on selected services, to which not a great deal of attention is usually given, quite frankly, in terms of moving markets, and Richard Fed President Tom Barkin will speak. So that's what we have this coming week, and that's what we've had this past week. As we have stated on numerous occasions, we're going to be in a potentially bullish phase for precious metals until that interest rate decision in September, at the end of September, is reached. And it's that run-up that is going to give us an indication as to whether prices will fall back or potentially could continue to rise if the feeling exists that to some extent higher interest rates will no longer be necessary. We don't think we're there yet. We'll wait and see. So, as stated, all eyes will be on the retail sales figures on Wednesday. Now let's go back to gold. We stressed last week that $1,800 offered considerable resistance, and the market view was that the gold price needed to rise above $1,815 in order for market strength to push it higher. and we could not see at the time what incentive would cause that 1815 to be reached. Well, it did exceed 1800 twice, the first time peaking on Wednesday at 1808, when the lower than expected CPI figures were announced, and then again in a slightly bullish run-up towards the end of the week, closing at $1,802. The futures market for gold is expressing at worst a supportive picture for the precious metal, and at best a bullish picture, with the December futures closing at or near $1,824. There was some purchasing of gold over the past few weeks when we saw a pivot from a focus on interest rates to a focus on inflation. How long that will last for will depend entirely on the figures being announced. That's the inflation figures, and of course as we approach the interest rate decision. Now technically gold has performed well and has broken above this 1800 resistance, and the question now is, will 1800 act as support, or have we just seen a temporary rally in a bear market? The 200-day EMA rests just above 1830 and offers considerable resistance, and if that breaks, then we could see a jump to as high as 1880. Some analysts are expecting a breakout in either direction, a rise to 1880 or a fall back to 1750, and soon, whichever the outcome we expect to see, a gold price move greater than $50 over the next 2 weeks, in one direction or another. Silver markets have been relatively strong, and holding above the 2050, that's $20.50 level, is promising. Should silver breach 22, then we could actually see a short-term rally, at least on the optimistic side, to $26. However, if we are entering a phase of recession, as mentioned earlier, and the economy shows signs of weakening, then a quick dip to $18 and then a further fall to as low as $15 could indeed be on the cards. The 200-day EMA sits near 22.34, and this is where we see the strongest resistance. We're at the stage also now where we have to mention the US dollar. It fell almost 1 full point last week on the index, and as a result we've seen a rise in gold and silver prices. Now their progress, in large part, though not entirely, is attached to the dollar performance, or at least the relative value of the dollar compared with other major currencies, that is the dollar index. And we must not be confused the difference between the dollar index and actually the inflationary pressure on the dollar. You could in theory have a rising index even though the underlying value of the dollar is falling due to rising inflation. The reason being is that the index is just comparing the dollar's strength with other currencies. It's not depicting how strong the dollar is in terms of purchasing power. And that's a really important factor to take into account. Now, as we mentioned last week, while investors and traders are focused on inflation over interest rates, we may see a little more strength in precious metals. However, should they pivot again the other way, then of course those headwinds will reappear. Now, until we begin to approach the next Fed meeting, which is at the end of September, frankly, gold and silver prices may be buoyed somewhat, with the lack of any action being taken, which could depress their price. So with this in mind, we expect to see gold trade between 1750 and 1850 this coming week, with 1725 and 1875 as outliers. We forecast silver will trade between $18.75 and $21, perhaps towards the upper end really, more than the lower end, with $18.22 as outliers. What do you think? Do share your thoughts, please. Meanwhile, we'll be making an announcement in tomorrow's video, I hope at least, that we are changing the Crypto Plus channel. We've got some exciting news there, and we will either mention that in tomorrow's video, which will be broadly a repeat of this, and if we don't do that, then we will make an announcement early next week. Do tune in and make sure you're a member of that Crypto Plus, because it will be changing into something quite different. Meanwhile, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And finally, we wish you a safe, enjoyable weekend and a prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds,
We are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.